Scenario analysis. Sometimes it's easier than others. And folks, this is one of the not so easy times. A lot of things going on, a lot of things being said. We don't know. But what we do know is that we got price in action in the market that is directly affected by this, whether it's your oil, your defense stocks, the consumer. We got a lot to talk about here on PMP. And at 8:35, we'll get a view from the floor. Jonathan Corpina, managing partner, Meridian Equity Partners, will be joining us. We got a full slate, and we got a full house on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right. Big ol' overnight range. We're down 15 handles at 67.85 after that monster rally yesterday. The buck week down 49 cents, 99.68. Two-day tumble. No flight to bonds here. They're down 64 cents, 89.17. Not a good thing. USO, they don't think the war is over. That's trading up a couple percent here. GLD in the green too by 262, 475.15. SLV in the green by 2.5%, $1.88 at 80.14. And Bitcoin finding support in yesterday's session, having a nice rebound, up $1,705. at 70,910. These charts are brought to you by TradeStation, born to trade. Chart, analyze, customize, all-in-one platform. Trade smarter and move faster. Stay in control with the platform built for serious traders and people that want to be serious traders. Well, Dennis, I know you've been doing a lot of scenario analysis here, and I'm so glad you're on the show today because you got these scenarios laid out for us.
Maybe. Yeah, we're always doing scenario analysis. This is what trading is all about, is scenario analysis here. We got Brentster back here. I gotta bring Brent in here right now.
Woo!
Bring him in here, back from his vacay. How was Vegas?
Vegas was busy. Vegas was really busy.
Boots on the ground, busy?
Yeah, I was in Vegas in April of last year, and it was like nice in Vegas then. It was like warm. It was a little chillier to when I went last weekend, but it was way busier last weekend than it was getting a little closer to summer last year. I don't know if because it's right before March Madness, usually gets very busy in Vegas, but yeah, Vegas was popping.
Nice. We like to hear that. We like to hear action there. When I was in Vegas back in October, I felt it was pretty busy too. Like people were saying it's dead. I was like, I don't know. It seems busy to me. Maybe I'm used to, being Georgian Bay, Ontario, and it's not that many people. So maybe it's all relative to me. But I was like, it seemed busy. So well, glad to have you back, Brentster.
Thank you.
It's been, an interesting couple of days here, Joel, obviously. Yesterday, the markets are in a lot of trouble early on. Again, we were down over 2%. And we started clawing our way back. They can't help themselves. We've been talking about this trend where you have the markets selling off overnight. They seem to bottom around 10:30, 11 o'clock, and then they slowly start buying the dip. Well, they were doing that yesterday, but then at 3:19 p.m., the Trump put comes back with a vengeance here. Trump tells CBS that the war, you've got the commentary here, Brentster, so I won't even try to just parse the words. Just give us what exactly he said to CBS that rallied the S&P 100 handles in about 10 minutes.
I think the war is very complete, pretty much. Iran has no navy, no communications. They've got no air force. Their missiles are down to a scatter. Their drones are being blown up all over the place, including their manufacturing of drones. If you look, they have nothing left. There's nothing left in a military sense. Reporter also asked about the new Supreme Leader, asked Trump about the new Supreme Leader. Trump said, I have no message for him, none whatsoever.
So basically, he's saying what the market wants to hear. He then had a presser at 5:30, completing those thoughts, continuing those same thoughts, where reporter was asking him, some people are saying, obviously, if this war, is just beginning here, you're telling us it's almost complete. What is it? And he said a little bit of both. And I'm like, I don't know how you can be a little bit of both, but we can kind of read between the lines what is trying to happen here. Earlier in the day, he says, I have a plan for oil to get oil prices back down. His plan was to tell CBS that the war is almost over. His plan was to come on at 5:30 presser and talk oil prices down. His plan worked. Oil tanked on that commentary here. So we can look at this market and say, well, the war doesn't seem like it's almost over. It doesn't seem like, but, logic says that. But it doesn't matter. The Trump put is what just happened here. What is the Trump put? It's when Trump defends the stock market. In the history of all the presidents since I've been trading anyways, but I bet you even going back even further, there has been no president that has protected the stock market and cared about the stock market more than Trump. He is the one, that's even through the Biden administration, through previous administrations, through his own administration in 2016, he looked at the stock market as a gauge for how he was doing and the president was doing. He does not like the stock market going straight down. He does not like oil prices going straight up. He has the midterms to think about. He can't have oil exploding higher from $80 a barrel to 120, 130. So he came out yesterday with a purpose to talk the markets up and to talk oil down, and it worked.
Oil's up.
Well, not from where it was.
Right.
Oil's slightly.
Oil fell like a good $13.
15% during that commentary period. So we're slightly up here this morning, which is a little bit of a snapback rally here. And yes, Joel, the S&Ps are selling off. So if you're trading anything, oil is your indicator right now.
Yeah.
Oil starts moving higher, you see the S&P start moving lower. We have a perfect inverse correlation between oil and the stock market right now. Perfectly inverted. Now, again, this is not going to be forever. We're going to go 6 months from now, and oil and stocks aren't going to care as much about oil. They always care a little bit, but they care a lot right now, a lot. So it's very important that this stock market, obviously, it's very important if you're trading anything like SPY, Qs, any stocks, that you're watching oil prices. And to your point, Joel, oil is rallying a little bit here this morning. We're coming back here, but I know the futures are actually down because of where the close is.
Right,
but USO is trading up $4 here right now. So you have the SPY trading down accordingly here. We were up this morning. We've rolled over since the recent USO rally. But Trump knows this. He knows this isn't good. And so what he wants is he wants to continue the war. He wants the stock market to go higher, and he wants oil prices to go lower. And he's going to try his darndest to do it. So he's continuing on his thing, but he's going to talk the stock market up and talk oil down whenever it is needed. That's what the Trump put is.
Also, implications, Dennis, you got me watching some of the international markets last week when we were talking about some of this stuff. And I noticed that an international ETF like the EEM also was rallying right around, or I shouldn't say also, but was also price action right around that comment, 319. You said it yesterday. EEM rallied like a good, $1.50 on this. What are there implications here for international markets in this context?
Yeah, I mean, it's all important. And again, we've got to consider the US dollar here as well in this commentary here. I don't know if you have DXY on TradeStation, Joel, but if you can bring it up. DXY is having a bad day here again. So US dollar is starting to roll over here once again. I believe it's putting pressure on the TLT here as well. TLT down this morning too. DXY is not an ETF, so I'm not sure if you can bring it up here. You can do it with UUP, whatever you want to do. But if you're bringing up DXY, if you do have quotations on that, it's down 0.4% here this morning. There's so many things to think about, internationally. I mean, one thing to consider is emerging, like if you're looking Europe, for instance, and even Asia, a lot of their oil comes from over there. A lot of our oil still, U.S. gets a lot of oil from Canada. So, I mean, we're not as impacted over here in North America. This war directly impacts all the European countries that are dependent on a lot of oil coming from there. China gets a lot of oil coming out of Iran and coming out of these, obviously going through that strait. What's the name of the strait? I always forget.
Hormuz.
Strait of Hormuz, yeah.
Hormuz. I got to try to say that name. But
You said it
a
right.
lot of oil coming through there. So that oil though is more dependent for Asia and Europe as is for the US. So that's one thing to consider is that really as this war continues, it's probably worse for Europe. It's probably worse for Asia than it is for North America. So that's something to think about. But that doesn't mean the international investor is not voting with their international dollars by selling US dollars, selling treasuries, selling US stocks. I think you're seeing a little bit of that. Does this war pass? It's all about, what the timelines are here too, and acceptable timelines to the market. September, when they were talking about September or later than September, the stock market started selling off on that because it didn't feel like an acceptable timeline to the stock market. So think about an earnings report. You have expectations. Right now, the expectations are the war was going to be over in 5 to 6 weeks. When people start talking about September, stock market starts selling off. Trump's like, we can't have that. So he comes and he says, stuff about, the war almost being complete, but would not give a timeline because he was trying to say, that, he's trying to talk that market from thinking about September to thinking about a little bit closer timeline. Even if he believes it's September, he doesn't want the stock market to know that because he knows the stock market will sell off. We're talking past September. This war could go on for years. I mean, if they really get into it, but at what point in time, the stock market and oil prices impact the U.S. thinking here, and maybe they would back down a little bit. The Trump, taco trade is at play here as well.
And maybe another area for a little discrepancy, those comments that I read, I closed them now, so I don't have them in front of me anymore. But the comments that I read from Trump to the CBS interview yesterday, he was speaking more like qualitatively. He wasn't speaking length of time. So just, if the market is going like, we want a timeline, and Trump's going, well, Iran doesn't have many missiles left. They don't have a Navy. They don't have, these other things. I mean, there's an area for a little discrepancy there, right?
He doesn't have a timeline. There is. This isn't easy. There's no like magic, wand to say this is going to be over. We know 4 to 6 weeks is very optimistic. If they want to really go in there and throw over, and make sure they don't have any nuclear power ever again, 4 to 6 weeks is like probably not going to get it done. September, maybe more realistic, but stock market didn't like that. So I don't think anybody knows what the timeline here is. So we're asking for something that Trump simply doesn't have an answer to. So he's going to just do and say what you're saying. We've done a lot of good stuff. Talk about this, talk about that we're ahead of their timelines. They don't really know. The timelines are really, up in the air here. It's going to be tricky to figure out exactly, a timeline on this, even inside the administration.
And if we're talking a timeline, I think that Johan here, where did it go, is pointing out something good. He's saying, I think he wants this over by midterms. Which
I think he wants it over like sooner than that, probably.
For
because,
sure.
But you know what? He doesn't really care about this being over. He cares about the stock market going down and oil prices not going up. Because he knows if you start getting oil and you start seeing the pumps, and we know the price at the pumps are already climbing because as soon as oil prices start going up, it's an excuse to raise gas prices. So we know we're already starting to see prices go up. That is a direct hit on the consumer. That is a direct hit on his voter. So he does not want oil prices to go up. So that is his fear. And then he says, I thought oil would go up a lot more. He's trying to do everything he can to calm the markets down, to calm, like the oil buyers down here. And it worked yesterday. I mean, we watched USO reverse. Obviously, it already started reversing, but was trading up at 118 and then tanked under $100. We watched a 15-point fall in the USO, which is around 15%, which is an incredible fall. So it worked yesterday. Was it temporary? Because they're already coming back to Joel's point and buying oil back up here right now. So maybe the markets are calling his bluff. But was it a temporary, like pullback here? And the markets are saying, look, you didn't give us a timeline. You didn't say the war was over. This commentary you dropped to CBS, you weren't saying that much about that in the presser. So maybe the market is calling his bluff here to a certain extent. And that, my friends, is why you're seeing the oil pop back this morning.
It's all in the context of these dramatic moves, though. Like I haven't been watching the market the last few days to follow through with this thought from last week. But last week, the week before, we were just talking about the major moves in both directions for earnings, for other corporate news. The dramatic moves continue here until further notice.
Yeah. Joel, I've just got to put my kid because my
Okay.
boy's getting his he's at the dentist getting cavity filled with my wife, and the kid's got to get on the school bus. I'll
That
be like
sounds
2
like
minutes.
fun.
I'll be right back at you. You know what? It's Jonathan's thumbs up here. Jonathan could come in. Give us a thumbs up if he's. Oh no, he's not ready yet. Okay. Jonathan
He
just ran
runs away.
He's like, I'm not ready.
All right.
I'm not ready. So
Well,
I'll be back in 2 minutes.
Okay, I have a little rant, but I'm gonna save it until Dennis comes back because I want him to get all fired up and everything.
All right. Well, Jonathan gave us the thumbs up. You want to go to him right now, Joel?
All right, let's go to Jonathan Corpina.
We'll go early. Here we go.
Jonathan Corpina, Meridian.
Morning. Good morning.
How you doing, Jonathan? It's been a while.
It's been a while. Thanks for having me back. I'm glad I entered the studio early so you guys can have me on while daddy duty comes into play.
So I'm so glad to have you on today because we're trying to get some clarity here. And I've worked on the floor. I've been on the floor, and the people on the floor know everything. Right? There's a lot of gossip, a lot of sports. They talk about a lot of stuff. So what are they saying on the floor?
Yeah, listen, I think we continue to talk about the volatility in our markets. I think we can talk about the uncertainty that's ahead of us. And those are the same conversations that we're having with clients. This market continues to pivot every single day, every single hour. Take for example what happened yesterday in the last hour of trading. We saw that large shift in the market yesterday. So the conversations that we have is, what is Trump going to say next that's going to move this market, and which way is this market going to move, right? Leading up into, I guess it was last Saturday or 10 days ago when this whole thing started, it was very well orchestrated that this was going to happen, right? We were moving our fleets. The message was out there that this was happening. A lot of rumors of imminent. They've got the Pentagon pizza watch of the pizza places near the Pentagon, and as they get busier, that means something's going to happen and escalate. So we knew this was going to happen, right? And the market was not surprised at all by this. What I think the market is surprised at, and I certainly am one of those is surprised, is the ability for Iran to fight back, so to speak, right? I think we've underestimated their strength. I think we've underestimated their artillery power. They've certainly have come back at us and our allies in the area. In my opinion, my uneducated, not Department of Defense opinion, they came back stronger than we thought, right? And I think the message that we were hoping for was, we're gonna go in, we're gonna wipe them out, we're gonna get out of there, right? And then it was 4 to 5 weeks, and it seems like things are kind of lingering at this point. Yes, they've quieted down, but it seems like this isn't going away as fast as we thought, or as easily as we thought it was going to be. So those are the kind of conversations that we've been having internally and with clients of what's going to happen next, right? And it's also real interesting because a lot of the activity that's happening over there is during our overnight, right? So we wake up in the morning and we're looking at the headlines, we're looking at what happened overnight there, and then things, as our trading day goes on, seems to quiet down the activity that's going on in this conflict, and it gives the market some time to digest what's going on. I think that's why we open so sharply on the downside, because we're kind of in the thick of it, of the overnight, and then things pattern itself out, things calm themselves out as the day goes on. So it's going to be real interesting, right? We had the president speak yesterday. I was listening to part of your lead in. I think he's trying to gracefully, in his way, find an exit ramp, right? I think he's trying to backtrack a little bit as far as the performance so far and the timeline so far. I think he needs to. I think the rhetoric doesn't always help when he starts to say one thing and then the cabinet somewhat has a conflict of words of what he's saying. But I think he's trying to, and I think Dennis, you were talking about, he's trying to get oil. He's trying to talk oil back down, right?
Yes.
And he's getting that chirped in his ear by somebody, that he needs to start putting these word bites and these sound bites out there to calm things down, and that's what we're seeing. Kind of interesting, the activity that we saw yesterday. I had a conversation with a client after the close yesterday, and he said to me, what do you think? Was this real? And I said, it kind of feels a little bit real, like this bounce here at this point. But I think today is going to be an important day, because if we see follow through today, that's going to certainly be helpful, right? If we open and the market spikes down soon after, it's not going to be good for sentiment for our market. So nothing, in my opinion, dramatic came out overnight with this. No significant escalation in conflicts, no comments that came out overnight. So it's going to be real interesting to see how this market opens, and if we can kind of get through this trading day. I see, the VIX popping back up here, a couple of points off the lows. We're gonna have to try to hold these levels if we're going to be able to get some sort of bounce in this market.
Jonathan, is there a scenario where the stock market can go up even with elevated oil prices here? Can we become numb to the Middle East headlines here? Because I think in Trump's perfect world, he gets to continue the war until he's got the job done, but the stock market stays elevated here. I think that's what he cares about more. Do you think there's a scenario here where that can actually happen? Or if oil prices just stay elevated here, that the stocks are going to roll over? What are your thoughts?
Yeah, so I think that clearly is a driving factor, right? And that's like the headline, unfortunately, of this war at this point is oil prices.
Yes.
If they're able to, and we're starting to hear it and starting to see it, if we're able to safely navigate the Strait of Hormuz and have oil tankers come through there, that will then ease some of the volatility, some of the tension on oil prices. At this point, having one or two tankers go through a day, yes, it's positive, but not overly helpful, right? You're opening up this massive faucet and you're getting just little drips out of it. We need that faucet open. So until we can get to that, oil prices are going to remain higher. We've seen the volatility there. Oil 2 days ago trading where to 113-ish, and then back down into the 90s there. I can't recall, and you guys have been in the business a long time, where you see oil have a 40, I don't know, $20, $30 swing in it within 48 hours. And it's unheard of. I was actually talking to a guy who used to trade in the commodity pit, and he's a little older than me and a little more seasoned. And I asked him that question, and he said, never in my lifetime would I have thought there would be a day where oil would have a swing like that in 48 hours. So back to your question, I think if we can get additional headlines out of the Strait that is showing us that there is progress being made there, albeit slowly. I think oil prices will remain somewhat elevated, not above 100, but somewhat in that 90-ish range, as tankers very slowly navigate through there. And knock on wood, no issues, no underwater mines, no pirate excursions that can occur in there. I think the war could still continue with the Strait open somewhat. Oil prices will stay elevated at those levels there, and the market will react positively to that. I think the market right now is accepting of where we are in this conflict. It seems there is a light at the end of the tunnel-ish, right? I think if you kind of think about our strength and our military versus their strength and military, at some point, the scale is just going to outweigh it, and they're not going to have enough strength to stay in this. So when they do that, I think that's when we feel that this market will have an end to it at some point. we're getting close to that. The president's comments, whether they're true or not, this might be shorter than the 4 to 5 weeks that he initially said. That could be a positive tack there. And we might de-escalate ourselves and let Israel and some of our other allies in that area maybe play a larger role while we play more of a supportive role instead of a lead role. That too would certainly help overall sentiment in our market. So I think we've got like a week or two more of this until we get a little bit more clarity.
Jonathan, everything that Dennis and I have said so far, and so far what you're taught, what you've said to me spells uncertainty. And that's one thing the market doesn't like. It doesn't like uncertainty. And we have not only uncertainty with this situation, okay, and the future impact on oil, we have uncertainty in the financial sector with private credit concerns. We have uncertainty about interest rates and unemployment going up. We have uncertainty about the effect of AI on our economy. I mean, to me, all this uncertainty, nothing is clear right now. So institutional investors like certainty. There's nothing but uncertainty here. How, when you talk to these, the institutional investors that, say like this, I've never seen anything like this before. This is such a recipe for disaster. You just say, well, the market goes on, the market goes up, the long-term history of the market, you buy the dip. Right now, the uncertainty in this market is alarming.
Yeah, so great point. This market trades on, what have you done for me lately concept, and what is the major headline. So just the fact that we're in the midst of this war, this conflict that's going on, you're absolutely right, does not negate the facts that prior to this, we were talking about impact of AI, interest rates, economic data, jobs numbers, you name it. Like those factors are still there, right? Those factors are still going on. They don't go away because of this. So that's an excellent point. Unfortunately, the market doesn't calculate that fully. It's more of what's in front of me. The market has blinders on, in my opinion. What's in front of me? What are we focusing on? And then we'll get back to that when we have to, right? And maybe some of that works itself out in some way while we're distracted over here and focusing on the conflict that's going on in the Middle East. But in fact, we do have to get back to at some point and focus on what is the Fed going to do with the interest rates. We've got a new Fed chairman coming in. We continue to talk about the impact of AI on many different sectors that are out there, and the AI names that were leading this market prior in some respect. We're going to continue to talk about our other geopolitical risks that are out there. I've been on the show for a couple of years now, and I keep throwing in the China-Taiwan conflict that
I forgot about that.
is not going away. And part of me is a little skeptical about what's going on in the Middle East now, because we had all these conversations prior in the last weeks and months about China and Russia, and we're not talking about them anymore. And they're sitting on the sidelines watching this all unfold. And is this a good distraction measure for them to start maneuvering or focusing while we're focusing somewhere else, while we're focusing on the Middle East? So yeah, the market is going to react to the current headlines. The old things aren't going to go away. Prior to this, the market was definitely lofty. It was looking for an excuse to take some risk off the table.
Sure.
It could have been anything, and we'll blame it on Iran, but it could have been anything that the market was looking for. Hey, you know what? This isn't a capitulation. This isn't a market meltdown, but let me feel comfortable and take some of these profits off the table. It just turns out that this Iranian headline played into that. But we're going to have to get back to all that stuff. That's all stuff that's clearly going to be impactful in our markets. And by the time this is over, we're going to get back into earnings season, and we're going to have, again, a new Fed chairman, and we're going to have all sorts of fun things to talk about. And this, we're going to have conversations go, oh, you remember when we were talking about the war in Iran back in March, right? This is going to be a thing of the past.
It will be. Just to update, we do have Hagseth talking right now. Just in the background here, today will be the most intense day of strikes. That's why the stock market's selling off a little bit here right now, as obviously this continues here. One last question for you, Jonathan, before we let you go. I want to ask you, Money Mitch is worried about the financials. So am I. I mean, we have seen, the financials hold up very well until January started leaking a bit. Now we're looking at the XLF about, 12 to 13% from the highs. Some individual names are off substantially from the highs. Goldman Sachs has not had a good time. Morgan Stanley has not had a good time. Bank of America leading down. Some of, the other ones, like if you're going into other financials like Blackstone, American Express even in itself is trading off almost 20% from its all-time high here. I know we can see the S&P off 3.5% and say, oh, it's, steady as she goes. But when you lift up under that hood, these financials, man, are pretty ugly here. What are your thoughts on the financials right now?
Yeah, I think we've spoken about the financials over time. We'll call it the last couple of years, right? And the financials, in my opinion, have really been able to hang their hat on trading revenue, investment banking revenue, right?
Yes.
Every earnings season,
Yes.
those are the two numbers that have been leading the financials, and volatility in our market has helped that. COVID shut down. We didn't have a lot of M&As. We didn't have a lot of IPOs and secondaries. That all started to come back in again. So I think the financials, their top line true revenue was being generated in those two areas, was sales and trading and investment banking. I think now, as we've mentioned, exposure to private credit. We've got credit card defaults and household debt at near all-time highs. I think where interest rates were for quite some time, yes, beneficial that they're starting to tick down now. We're starting to see mortgage prices come down. We're starting to see some refinancing, but there's a lot of people on the fence here who's not sure which way these interest rates are truly going to go with this new Fed head coming in. And yes, even though it's a Trump appointee, I think he's going to continue to toe that line of independence between their committee and the White House. The financials continue to be under pressure. I think we're going to continue to see that until we get some more stability in the interest rate market, and that's not going to be for some time, in my opinion.
Awesome.
I couldn't agree more. Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, giving us a broad perspective on the markets, Jonathan. Not
Have
so
a great
long
day.
Next time. You're a monthly guy. We're getting you on next month.
I know. I got to do it. I got to make sure I commit to this, but I truly enjoy it. We've been friends for a long time. You guys have been through thick and thin with me, and I appreciate it.
All right.
Thanks, Jonathan.
Thanks, guys. Have a great day.
Thanks.
Good luck with the dentist.
We'll see the kid. We'll see how that goes. I don't like the dentist. I'm glad I'm not going. Earnings here. So we had a number of companies report last night. No major companies on deck. The biggest one is going to be Oracle tonight, which we will preview here in a second. We did get a couple interesting ones here this morning. And I think it's something to look at here because Kohl's, which was, this stock coming back. November had the ridiculous, and I mean epically ridiculous rally from 16 to 24. We've come all the way back on Kohl's, all the way back down the mountain here. And I'm going to say, when your stocks are in eternal downtrends, and they are crappy companies, and Kohl's, my friends, I'm sorry, is a crappy company. When you get a rally of 50 or 60% in a day or two, you ring the register, you say, thank you very much, trading gods, for looking out for me, and you move on. Because the people who were selling up at $23, $24 back at the end of November, rewarded for those sales. The stock is now back at 14. How did they do, Mr. Brentster?
They did good. The report was good. The guidance was like in line to a little weak, but I mean, for a retailer, I thought everything looked pretty good. They reported Q4 earnings 107. Analysts were down at 85 cents. Sales with also a decent B, about 5.2 billion in sales. Analysts were closer to 5 billion for the 2026 guidance. A wide range here, but it was kind of in the middle. They're expecting earnings $1 to $1.60. Analysts are at around $1.40 for the sales. They're looking for 2026 sales 15.2 to 15.5 billion. Analysts down around 14.9 billion. Let's call it for ticker KSS. Stock was trading down pretty substantially here today, but it has come pretty much all the way back here this morning.
Those posts that they put for 2026, it was their $1.39 estimates. They went a
Oh,
buck
right.
to $1.60.
A
That's
60%
telling me
range, basically.
Market don't like uncertainty. That is uncertain. So that's probably the main reason why they really hammered it on the initial report. But the buy the dip emerges, Joel. It emerges even in Kohl's. They're like, oh, I get a 3% dividend. Oh, they sell
Dividend
some stuff.
safe.
Yeah, even though they closed the store by you, Joel. I mean, they had Amazon returns there. They'll find a reason.
No, you can't return anything there anymore. Not
Oh, they stopped
Amazon,
that?
not anything. They're not taking
because there's no
because they're
store.
closing the store.
Sorry.
Is that actually real, Joel?
It is true.
Wow.
Yeah.
Okay. You got to
Because
send it
Lisa
in?
said it, and then my buddy said no, and then I said, well, I'm calling the store. So I called the store, and they're
Wow.
out.
Okay.
They're
That's
closing down.
interesting.
Yeah, closing.
Are you going to go for like the closing the store sale there? Like all the liquidation sales?
No.
No, you don't. I would go there. Do that.
No.
Maybe I should drive down there to go to your Kohl's just to like
Home
load up
goods
on a
stuff
new wardrobe. I need
at
a new
Kohl's?
wardrobe. I like 90%.
I mean, like stuff that you gotta like. There's things that you have to touch, in my opinion, to buy. Like I got a suitcase there, and it's like where I wanted to like be in store with the thing. I don't know. Like sheets, like your bed sheets. I don't know.
I kind of always liked the store. There was always good deals in there. Name brands, reasonable prices. It's kind of like an off-price retailer to a certain extent.
Dennis, there's actually a picture of you outside the store.
Oh no!
And they're like, if knows this person, you're not allowed. You're not allowed in the store.
It might be true. Like say Savers Value Village. Yeah,
I will just say this $14 area is of interest to me. They did punch it through it in the pre-market. Actually went substantially lower than that $14 level, getting all the way to, let me check it out here. You got a pre-market low of 13. I think this is where we started from, gapped up in September here, came back down to it, held, had the monster rally, then just came undone. I'd be looking at this, not at 1441. I'd be looking at this over the next few days. Are the bulls going to reappear here at $14? Long-term KSS.
Your disaster stock of the day, we're going to go with BNTX, BioNTech, and it is down 17% on its earnings. They don't like it, Brentster. Talk to me about this earnings report.
All right. First time I'm looking at this report, loss of 38 cents. That's a better than expected loss. Analysts were looking for 47 cents. So that is better than expected. Sales look strong too. Sales over $1 billion, 1.06 billion. Analysts were down under 900 million. Let's see how the guidance was. Guidance is where we got some definitive weakness. Company looking for 2026 sales 2.3 to 2.7 billion. Analysts all the way up at 3.1 billion. Quarter fine, guidance bad, stock down 18%.
You don't like bad guidance. Bad guidance trumps all, and that's not a good way to the downside here. The stock has been absolutely hammered. Joel, find me a level. Find me some support.
Yeah, I was getting 91. What's an 84? 91 is where I was looking at all these lows.
91. We're at 84, so we're through that.
So I would say 91 would be support, but I'll call it resistance. What do you do when you
Tariff
get
tantrum low? You got to go all the way back there now.
Yeah, there you go. Nice call, Triple D. 81.20. There's your level. 81 to 91. Let it battle it out in between there. But that is your it was actually a little bit early. Was it April? Yeah. Your April low on the weekly, 81.20. That's my number. And for this to show any kind of life here, you got to get back above 91. So, and it's moving on earnings. They must have been some really horrible earnings, as we know that these stocks, these biotech stocks, usually move on
Good
other
call.
things. What's the one related to this during COVID, Dennis?
Like
Well, Moderna and Novavax. There was the three.
Novavax.
And VAX. And Pfizer had the deal with BNTX. I mean, all
Okay,
these
that's what
stocks
I was thinking.
Pfizer, the deal with BNTX, Moderna. I mean, these were the darlings of the COVID era. They've all been rocked because, let's be honest, not a lot of people get the COVID shot anymore. So this is the main reason why these stocks all come down. They've never recovered. None of these stocks have ever really recovered fully from the COVID recovery. We all recovered, but these stocks did not. We got Raphael dropping us a $5 for NEO.
Ooh,
Thank you, Raphael.
thank you.
And you know what? NEO trading up here. I've been talking about liking the Asian EV plays. I have a big position in XPEV. I don't have a position in NEO, but I like the support here. Let's talk the earnings and then let's talk technicals.
Earnings look solid. They reported 4-cent gain per share. Analysts were looking for a 5-cent loss. Sales were strong. Their sales were about 4.95 billion. Analysts were around 4.6 billion. Guidance, they're expecting Q1 sales strong here, 3.5 to 3.6 billion. Analysts under 3 billion for NEO. Deliveries for the fourth quarter were up almost 75%. They delivered almost 125,000 vehicles just for the last quarter of 2025. Seems like a bunch of solid numbers here for NEO, and shares trading up about 5 or 6% this morning.
I like all these Asian EV plays. One thing to consider, obviously, is Asia stocks are in trouble right now here with the war, oil, but these aren't EV. So, I mean, this actually maybe helps that a little bit to a certain extent. And then, there's always the wild card of the China-Taiwan situation. That's always a wild card. If ever there is an invasion of Taiwan, all these stocks are going to fall 40 to 50% one day. So you just know that is always the risk here. We've been talking about that for years. It hasn't materialized. We hope it never materializes, but that's, always the risk of investing in anything over in Asia. I like NEO. Like I said, I have a big position in XPEV too. But Joel, is there a technical level on NEO you're looking at?
Yes. Thanks for the Lincoln. Or if you're in Canada, it would have been a Sir Wilfrid Laurier, but now Laurier. But now it will be Canadian icon Terry Fox on the new $5 bill.
Oh yeah,
really?
Terry Fox
That's
on the
pretty
$5.
cool.
Nice.
Yeah,
that's kind of.
I think that's out. I think that is out.
Yes,
now.
it is.
Terry Fox $5.
Yes.
Nice.
Yeah. This is what I'll say to Raphael. Raphael, you're getting a nice bump today after your decline from the 550 to 450 area. For me, not a big mover long term, but if you want to see a base, see it at $5. Like you're up above 5 now. You traded 5 at 30. Are the bulls willing to make a base at 5 and take this to 550 and beyond? So that's what I would be looking short term and long term in the price action of NIO.
One other one from last night, if we want to just go into last night's earnings and
moving
around here, was Vail. I was worried about this going into the report. We talked about it in the STN. It did kind of disappoint. Main reason is we've obviously got boots on the ground with Tim out there saying the conditions hadn't been great for a while. So I was kind of worried about the guidance. What did Vail say?
Vail said they missed for the quarter. That's the thing, though. It's like this was so telegraphed. I don't know if anyone was super surprised. They reported 587. That's a pretty substantial miss. Analysts were up at around 620. The sales also missed pretty substantially. 1.08 billion. Analysts were up around 1.1 billion. They didn't give any guidance. I don't believe they normally give guidance, though, so that shouldn't be too huge of a concern. I think the company was doing things earlier in March to try to get people out to the mountains. Like they lowered the pass prices for younger people, like college age kids could go in there and get a little pass for their the Epic Pass that gets you to all of the mountains that they own. So, I mean, a couple things. This was very telegraphed that this was probably going to be a light report. And also, if we're looking for a silver lining, the company is at least trying to do something to get more people out there, lowering prices a little bit. So,
Sure. So they made $6 in the quarter, or that was the year estimates, Brett?
let me see. Let me look at the
year.
Let me look in the press release here real quick.
Like,
Excuse me if I read wrong.
No, they can't do much in the quarter. Did they?
So for the quarter, they reported.
or actually, this is probably a company that makes all of its money in this quarter.
Yeah, the end of the year.
Yeah, because it's the season.
Yeah.
Right?
Yeah, this was for the quarter. Yeah, this was for the quarter. Yes.
Yeah, that makes some
numbers
sense.
that are-
They're going to be proud. That's they're out there. This is their money making season, so it makes sense that they make it all. The thing has a 6.8% dividend here. I mean, it is a value stock, but I don't know. Like, it's expensive too, like stuff out there. So, and obviously condition sensitive. When you don't have the greatest of a winter here, it's not as great. So, and I mean, the conditions, Tim's been complaining about them for the last month that he was on the show. The last 2 times he was on. So that's something to think about. But it doesn't mean
it was historically horrible long-term performer.
It has been. I mean, MTN was $350 5 years ago. It's $133. The one thing you got is COVID low, 125. That's huge.
Yeah,
so there's hope there, I guess. I guess there's hope, but it's been a rough, sled.
Skiing's too expensive. It's expensive, and
it is, but people love it.
I know.
That's why you got to get the
jobs lost by AI. They're going to give up their ski passes.
We're rallying. Do we have some positive comments coming out? We got to rally. We're rallying.
Stop talking. Let's get to today. So Hagen says today it's going to be the most intense day of strikes. Stock sold off about 10 points after he said that. We're like, fine with it. Rallying it back. By the dip emerges. That institutional money manager playing with your money. He doesn't care. Comes in and buys the dip. She doesn't care. She comes and buys the dip. That's it. That's where it's at.
Oil back under 90 here. Just to mention. Just in the last
oil too is your catalyst here. Oil leaking a little bit, right now. Let's do an earnings preview here. Can we get that slide up here? Because I want to talk. We got some big ones tonight. The one that everybody is going to be watching here tonight is Oracle. And why? Because this stock was one of the leaders on the way down in the last 3 months. Obviously, they were worried about AI spend, worried about a number of things here. Has all the bad news been priced into Oracle, Mr. Elconin? I will throw that question to you.
I hope so.
I hope so. I'm long a little bit too. It's been awful.
Boy,
awfully
boy.
Painful.
I mean, the bar, I mean, they had such a high bar, low bar. I mean, this has got to be a really low bar, a really, really low bar here to get over. I'm not comfortable with saying the stock is, going to rebound until you can get back above the 160 level. I'm just not going to go with exact, but I'd say you hold 160 and you got a chance to get some of these monumental losses back. Yeah. And if you take out 140 or the low of the move, I don't even want to look at the monthly on this one, but I would say low bar, and hopefully they can get over that low bar. And also, I mean, we've talked about this several times on the show, where you're at. Not as much lately with the conflict going on, but, AI. I mean, does AI, is it just doesn't need software anymore, or can
that's been the whole thing. Like yesterday, just to talk about yesterday's trading action in that context, is everything had a huge rally here. Software IGV ended up being red on the day, so maybe a little bit too much of a comeback here. We're up about 15% on the IGV, 13% since the lows. A lot of other names are up 15 to 20% from those lows. Oracle's not one of those names, not participating much at all, which is concerning in itself. But you saw hardware, you saw money coming back into like Marvell. MRVL didn't get out of the S&P. We mentioned this one in the STN room, I believe. It might have been on pre-market prep too. And I said, this is kind of what I would buy on the dip here. I actually own Marvell, MRVL, because it was down with the overall market yesterday morning. It was down because it wasn't added to the S&P, but they just announced like guidance of all guidance, Brentster. You were here for that. the Marvell guidance was excellent.
Yeah.
So, it's the kind of stock they're going to bounce back into. SanDisk had a great day yesterday. Key reversal coming back to the upside there. I mean, Micron, holding on and had a great day as well here. So, I mean, they're starting to come back in. And that's what I was saying. My themes for dip buying, I'm going to continue to say this. Why do I continue to repeat myself? Because it's working. If it's not working, I won't talk about it anymore. But what is working? Energy on dips, hardware on dips. Those are the two main ones. TLT not working very well. So we're not mentioning that one right now. Because I don't want to keep throwing stuff at you. I think TLT is going to be good long term because I think rates are going to go down in the second half. But we're a little bit early on that trade here right now. But hardware and energy, that is what they are buying on dips, folks. Those are the kind of stocks they're buying on dips. Constellation Energy, I love that one. And obviously, the hardware names, there's lots of hardware names out there. And those are the stocks that continue to get bought.
I'm just gonna take the other side on the Micron and the SanDisk here, just to put things into perspective, because for both of these stocks I did have a 50% retracement in there. I took it off because you know what? It made a new low of the move, and now it rebounded again. So what you're seeing in Micron and what you're seeing in SanDisk is you're seeing just monumental rallies, right? Just like the most mind-blowing rallies you've ever seen. February high. You see a break, you see a recovery. You see it come up short of that recovery of the all-time high. Then you have another dip and you take out the previous low of the move. Now is major resistance going to come now down again where people are selling into strength on this one? So to me that, is a long-term trend broke into the upside? No, but it is establishing some weakness, market dynamics, putting effect in that and making lower highs. So we'll see how that plays out with Micron and SanDisk, Western Digital, Seagate. You pick your poison.
Want to just pull up our calendar? Thanks to Michael Feehan for putting this together one more time. Just kind of double check. We don't have anything else too exciting. Yeah, everyone's kind of focused on
Thursday's a big day with Adobe. Obviously, Michael Burry took a recent position. At least it's rumored. We don't have confirmation of that yet. RBRK is another one reporting. I've got kind of Alta's on there. There's some names. Dick's Sporting Goods is always an interesting report there too. So there's some names here, but it's a light earnings week. We're out of we're past the heat of the earnings season.
We do get CPI tomorrow. Is that correct?
Mm-hmm.
Okay, sweet.
I think that's
CPI.
right.
Yeah, CPI.
Yeah, and that's going to be
tomorrow.
really, and one thing is obviously the recent rise in oil prices is not going to be included in this data.
Exactly.
So we can't think about that.
Sure.
But I mean, with the last number coming out, what was it like last week that was coming out? Well, jobs was light, and they didn't like
PPI
that.
PPI was the one that was hot.
It was a little bit hot, eh?
Yeah, it was. But
I mean,
we know that as far as the market goes, we care much more about the consumer side, the CPI, than the producer, the PPI.
Yes. Yeah, so I mean, it's going to be big for the markets too. Maybe that becomes front center here. Today, it's going to be talked about the increased strikes here. Obviously, the Hags has just said what's going to be. So that's going to be talked about. We're going to see oil chopping around. Just remember the inverse correlation between oil and the stock market right now. It still remains. Do you want to read some ratings?
Sure. Suit up. A few highlights here this morning. I'll name a few here, and then we'll let you guys pick what we want to talk about. CrowdStrike was upgraded to overweight CRWD at Morgan Stanley. We also had a Rivian upgrade, RIVN upgraded to buy at TD Cowen. We also had our buddy Gordon new buy rating on NXT NexTracker, I think, by GLJ Research. Also a Teladoc upgrade to buy at Deutsche Bank TDOC. What are some of the highlights here out of those that I read?
Well, I'm going to talk Rivian first. It was part of my old acronym before I scrapped it there a couple of weeks ago here. I was long the stock. I sold in the pop on the earnings pop because I'm worried about job losses in the second half. I'm worried about white collar not being able to afford buying Rivians. That doesn't impact right now, though. So I'm curious if you can give me some color from that note there, Brentster, if you have some color.
Give me one sec.
Yeah. Like, I love the company. I think they're doing a lot of things right. I think they're going to an environment, though, that's not going to be favorable. That's why I'm concerned about it. So, analysts, I have it. Upgrading Rivian from buy from hold. Following detailed R2 demand analysis published in conjunction with our ahead of the curve report, we see full-scale R2 demand of 212 to 335,000 units, suggesting upside to 2027 consensus. Shares down 20%. We like the risk reward. Price target $20 on a narrow 27 EBITDA loss. That's where they're at. So they're saying, they think the numbers can beat. Again, I'm going to say the same thing. The reason I've sold the stock and moved on is because I am worried about white-collar job losses happening here in the second half. I think other people might be worried about, even if you're worried about losing your job, you're probably not going out and buying a $100,000 truck. So, I mean, that's where I think, I love the idea. I'm just worried about where we're heading. And that's why I don't want to own Rivian coming into this environment. So I'm going to stick with just staying on the sidelines of this one, even though I like the company.
To me, it's all about $17 here. This is a high at 17.09. This was on the way down. A lot of people got smoked in this move, looking to get their money back. Trading up $1, trading up 6.43%. Boy, oh boy! If you want this one, if you love this rating, you love this company, you want to see it just not even flinch. Get up above 17, hold 17, and then start to work your way back to the 18 level. Little skeptical on this one. Maybe we'll see if anyone's selling into strength.
What other ratings were there, Brentster?
There was a CrowdStrike upgrade by Morgan Stanley. They upgraded to buy. This is a reminder after the Tuesday earnings report. The commentary on CrowdStrike has been kind of mixed. There are a few bullish analysts who are saying AI tailwinds, and there are a few analysts who are more neutral on the name. A little color here for this Morgan Stanley upgrade to overweight. They mentioned the AI tailwinds. CrowdStrike has AI tailwinds in its next-gen security operations center business and opportunities to expand share in endpoint. The recent pullback in shares creates an opportunity, according to Morgan Stanley. Seeing some of this color from the fly. The firm moved CrowdStrike to its top pick despite seeing more upside in the short term for other names other than CrowdStrike. Joel is giving it a late.
Give a grade.
L. Late.
F? Oh, late. L for late.
Yeah.
Well, I'll give you that too. L for late, 350 to 450, and now you upgraded. It's a little bit late to the party here.
Yeah.
I mean, is cybersecurity going to be replaced by AI? This was the concern 2 weeks ago, and obviously those concerns are starting to go away. This is ride with the IGV. Are the concerns real? I don't know, but you've had some P multiple contraction here too. Like, one thing to consider is a CrowdStrike is not a cheap stock. Like, where is the P on this puppy? 89 times earnings. I mean,
whoa.
Man. I mean, you're paying 89 times earnings. Maybe it's going to come
89?
in, but that's the forward basis. Like, I just can't get on board here after it's riding $100. Now you're upgrading at Morgan Stanley, so I'm going to say, yeah, late to the party here. We can look at sales, you can look at different things, but I mean, you're buying something at an extreme nosebleed valuation that we don't know if it's going to get disrupted. It just doesn't sound like a risk reward setup for me. So I'm out on CrowdStrike. Sorry, guys.
Yeah, you got a pop here. The 4 o'clock buyers took it to 447.44. There's a pair of highs in that area. So if you're looking for follow through on this one, got to get up to that pre-market high and test the 448 level. If not, I mean, what a run. If you've been buying this thing over the last 1, 2, well, that wasn't a great day. 3, 4, 5, 6, 7, 8, 9 days, and now you get an upgrade. If your choice is to sell into strength and you have targets in this area, well, perhaps you should stick with your targets.
Let's do one more here real quick. It is NXT from Gordon.
Gordo.
Yeah. He's setting about $147 price target on NXT. Gordon says he believes the utility scale solar market is, quote, rapidly concentrating into a handful of tier 1 developers. NextPower is one of the only vendors with the execution capability to consolidate their SKUs vertically. Stock trading around 108. So, Gordon's price target here, you got a good $40 of upside potential.
The one thing The one thing I love about Gordo is he gives you it to the penny always. He always goes, like
147.33.
$147.33. Like he is precision. He's all about precision. We Gordon Johnson been coming on our show for a decade. And love him or hate him, he's gonna defend his opinion, and speak like nobody else can speak. He is a great speaker.
Yeah.
So he's been wrong on a few things, right on a few things. This next power is intriguing to me. One, it's in the energy sector.
Yes.
So yes, that's going for it. Two is I don't think the valuation is nuts here. Let's go and look. And I haven't looked at it for a bit. But this recent pullback here, I think I kind of like it. It's 22 times forward earnings, which is not a crazy valuation either. And I mean, it's come a long ways from where it was $40 a year ago, so 108. But I think we're still going to need power. And I think this recent pullback here is a buy. So you know what, Gordo? I'm giving you an A on this upgrade. It's a little bit. I would give you an A+, but I'm not. Nobody's perfect here. But I like the timing of this. I actually would not chase. I don't like chasing, but that's not up much here this morning. I could get talked into this NXT. I could get talked into it.
I'm with you here. It had to pull back. Buyers stepped up at big time at $100 and sub 100. Getting back half of that move is not unreasonable. The 115 area, little gap to fill. So, as opposed to the CrowdStrike, this thing's just been going flying for days here. I'm going to go with you. I'm going to go with you on this one. So,
yeah, big move yesterday. Folks. I'd love a dip, but yes. I mean, this is down to 100, 300, 405 bucks. I like it. NXT.
All right, a full crew here on pre-market prep for the first time in I don't know how long.
But it's sick for a month.
Yes,
weeks, yeah.
I took a little vacay and then the Brentster went out to Vegas, but we're here. We're bringing you the markets live tomorrow. We had to reschedule Stephanie Link to come back on the show tomorrow. So
nice.
Fans of Stephanie Link, I'm sure you all are. She'll be on, but that's a wrap today here. I don't even know what to call it. I mean, it's not really a Taco Tuesday because they got delivered yesterday, right? So important day for the market. Uncertainty, everything. I think a flat day would be a good day here. I know we're slightly in the red. We don't have to rip another 100 handles. I just don't want to see us fall another 100.